If you're watching this, you're more than likely a trader or you're very interested in trading. As you know, trading is a very emotional sport and it drives our decisions. And science backs this up. Do you know that the fear of losing money is twice as strong as the exuberance of winning money? And recent searches with Google confirm this. Recession has been the highest in searches since 2022. VIX spiked to the highest levels we've seen since the COVID crash. Stocks pulled back 10%, and 37% of investors have admitted that they have turned bearish instead of bullish. Now, I don't want you to be fearful because when you're fearful, you lose money. Today's video is all about helping you through what may be a very choppy September. And if that's the case, you need all the tools in your arsenal so that you can protect your portfolio and even make money. Now, I'm happy to share that the majority of my community members, they were prepared for the Monday crash of August, and many of them are sitting on top of huge gains as a result of striking when stocks were at bargain basement prices. After all, they had the cash ready because we have been preparing for this. Let's first listen to Tom Lee and his perspective over the coming months, and then I am going to share with you what I'm doing about it.
It had been whipsawed by data point to data point as you guys were recapping. You know, the jobs report raised recession fears, big risk off. Then we got inflation this week, which was pretty tame, and I think markets suddenly went back to thinking about liquidity coming into markets. I think that the data dependence of the markets and the Fed is very tough for investors. And I think if you look ahead, I'd say we always know the summer is tough. Summer probably runs through October, but I don't think that anything's changed into year end, which should look pretty good.
But are you lower conviction now than you were 2 weeks ago?
No change in our conviction, but it is just recognizing August historically is a tough month for markets. I mean, one thing that maybe investors can be encouraged by is since 1928, the most common month for the summer low is August, and the most common week is the first week of August. So I think maybe the worst is behind us, but it doesn't mean we're straight up from here.
Now, history of the stock market does show that August and September are typically rough months for the S&P 500. October is either down or muted, but the great news is that in an election year, November usually soars. Using my knowledge of this history, I am doing a few select things. Number one, I am cashing up. I always encourage my community members to have at least 25% cash waiting in the wings so that they can buy stocks on the cheap. And if they do that, they can see their portfolios rebound much quicker. We recently did this, so now that stocks are soaring again, I'm taking another advantage of this opportunity. I will be selling some of my winners and trimming some of my positions. Now, I'm not getting out of the stock market completely. It's very important that you always have some skin in the game because we cannot predict the stock market. We try very hard based on history, but you never want to be completely out because if you miss the 10 best trading days in the stock market, your portfolio will not enjoy the appreciation of the average S&P 500 portfolio. The other thing I am doing, I am either setting trailing stop losses or selling covered calls on my positions. Now, if you don't know what all that's about, I recently did a video for a friend of mine, Larry Jones, and I will post that video this week so that all of you know exactly what you need to do to set a trailing stop loss or sell a covered call. The third thing I'm doing, I'm going through my portfolio and I am looking for the sold puts that have yet to profit. I am looking to roll those trades through September into the fall where they have a better opportunity of rebounding. Let's go into my portfolio. I'm going to show you exactly how to do this. If you have a particular position, maybe it's a sold put, and you feel like that put is in trouble because you're coming upon the expiration date and it still is not in profit, I have been rolling my positions out to the November timeframe. The simple fact that typically in an election year, November is a positive month has given me what I consider to be a safe haven for some of my positions that may be in trouble. So I want to take you through how to identify what positions you may be interested in rolling, and then show you exactly how to push it out to a date that may give you a little breathing room and also allow you to have it expire fully worthless. Or you could potentially at that point roll it out further, and if stocks do go up in November, you'll have a better opportunity to roll it at that point for additional profit. So when you go to my Robinhood account, I'm looking right here at this Riot $11 put. I have sold 5 contracts. And what this means is I have agreed to buy Riot stock. Let's go take a look at it. Here's Riot stock as it stands today. It is currently trading low at $7.97. Now, I sold the $11 put, which means I have agreed to purchase this stock at $11 a share if by close of business day on September 20th, it is $11 or lower. Well, at this point, we're well below the strike price of $11. And so because of this, I could actually be assigned at any day. The probability of early assignment usually happens closer to about 30 days out, but about 7% of all sold puts do get assigned early. And I'm at risk at that because whoever is holding this contract may want to take advantage of it now versus waiting. And if they do, they would be able to give me their Riot shares. I would pay $11 a share when today it's trading at $8. So I want to move this trade out of harm's way. Now, remember I had shared with you that I felt like November would be a good time frame because the market typically rises in the fall, and that would also more than likely play over to Bitcoin, and Bitcoin affects Riot. So all those things considering, I want to roll this trade to get it out of harm's way, try to lessen the chance of early assignment, and make more money if I can in the process. So let's see what they are offering if I'm going to roll the position. I really enjoy Robinhood's platform. The only thing that I wished it had was an actual option chain. So I am going to Tradier Brokerage to look at option chains because I am able to see everything laid out very clearly there. So when I get to the chain, I am on the 9/20 expiration. And remember, I had that $11 put that's right here. Currently, that is trading for $3.15. And so if I am going to purchase this back, I'm going to have to pay $3.15. Well, let's go see what I received in premium initially when I sold the $11 put. If I go look at my position in Robinhood, it looks like I received $2.59 a share when I actually executed this trade. So it shows you right here, Riot has to get to $8.41 for me to break even. And so one thing to consider is I am looking at that other trade that was $3.51. So what happens when you roll? You have to give back everything you already received on the trade. So this would be $2.59. I have to give all that back, plus a little extra money to get to $3.11 to buy it back. So once that's done, now I want to go shop for a new trade that I can sell that goes a little bit further out and preferably would be at the $3.11 point or higher for me to sell a new one. So let's go back to the chain and go shopping. I mentioned $3.11 and it may go for $3.11, but it looks like right now it's trading at $3.15. This is because there's a wide bid-ask spread. You see here $3.05 is the bid and $3.15 is the ask. And the reason that exists is because there's just not a lot of volume on the chain right now. So that's just important to note. You should do limit orders when you see that gap in the bid-ask spread. So now what I want to do, I had felt like November would be a better time frame, but now I look on the chain, they don't actually have a November chain. So they have October and then they have December. So I'm going to actually go through December because I feel like I'm going to have to go out a little bit further. And then if the stock market is rising in November, I could probably get out of this trade and profit. So let's go look at the December time frame and let's look at this same $11. Now, sometimes I like to go down lower in strike, but because I believe things will be running smoothly in that November timeframe, I'm going to go ahead and stick with this $11 strike. This will afford me $3.68, and remember, I'm getting rid of the other one at around $3.15, so that gives me a small credit. Hopefully, this expires worthless, and I'll keep all of this right here, being that I'm having to pay right now 3:15 to close it out. So let's go see what that looks like on a roll. In Robinhood, when you go to execute this trade, you open up the trade and you can see here my options at the top are buy to close and sell to open. Well, not interested in just closing it out. I actually want to roll this position. So you come down here to this bottom corner and you select roll. And then what it's going to do is it's going to open up different option chains for you to consider a new price. So I had already looked at the chain and I had decided that I wanted that December date. So I'm going to click December right here. I was comfortable with the $11 strike. So let's go look at that. And here it is right here. So I go ahead and I click this on and I press continue and I'll show you what it looks like. Because I'm doing 5 of these, it's calculating the additional credit that I will receive for rolling this. So I will get $314 in extra premium for rolling this out a little bit further. It's taking into account what I'm paying to close down my original trade and then what I'm receiving to open up the new one. Here you see the detail right here, buy to close this $9, $20, $11 one, sell to open this $12, $21. It doesn't require any more or any less capital. Since I stuck with the $11 strike price, it's still requiring $1,100 a trade. I'm showing here that I am doing a limit price of 63 cents, which is, almost in the middle here of 0.55 and 0.70. Once you execute the order, it will go in queue. Now, it hasn't been filled yet. It's showing right here that my limit price is 63 cents and it hasn't picked it up. So I will just have to wait to end of day. And if it doesn't pick it up, then I will consider if I want to try to put this trade on again tomorrow. Let's look at one more potential play so that you'll have a sense for how this works with a different stock. I'm looking right here at my NVIDIA play. I have sold one put expiring this Friday, and it's at the 128 level. Now, I'm comfortable leaving it there because I'm happy to be assigned with earnings coming up, but let me show you how much this would yield on a roll due to the higher volatility with earnings. And when I get to the trade, I change the calls and puts to a roll, and that's going to add the additional leg. I go ahead and grab the trade right here. I populate one. And then for convenience, you can look up the option chain and just look at different offerings that they're having. Right now, $2.94 is the price to beat. So if I'm going to have to buy this back for $2.94, I want to go find something that I can sell for more than $2.94. And I mentioned that November timeframe. I don't think we have to go out this far, but let me just show you how much extra premium you can get if you do it this way and push it out a few months. Again, I'm comfortable staying with the same strike price because I think we will be doing much better by then, but I could go down in price if I wanted. If I wanted to go down in price, I've got plenty of opportunities because look at the premium and I just have to get over $2.94. So I could go down to say 125 and make the trade a little bit safer. Not only will I make the trade safer, but it will require a little less capital because my broker is now holding the $128 a share. But if I move down to 125, they're going to release them because now I only need $125 a share to put on this trade. And if I look at my volume and open interest, this is a popular spot right here. I could even go down to the 120. That would free up $8 a share and I would still get a sizable credit. So I've got a lot of different options, but like I said, because I'm real bullish on NVIDIA, I am going to stick with this 128 and let me show you how much money I'll get on the roll. Okay, here is how it works. You'll get a net credit of $10.92. What it's doing is it's taking into account the amount I had to pay to close this one down, $282, but then I'm selling a new one for $13.91. And so the dynamics of these two together are giving me a credit of $10.92. So if I preview this, there you see I'll get an extra $1,000 to push this out to November. And so that's how you do it. That's how you make more money. You push out to a time frame where you think that the stocks will be doing much better. That will help you keep your trades safer and your portfolios secured. I hope this helped ease your mind and gave you some actionable items so that you can go and prepare your own portfolios so that you're not so worried about a downturn in the market. For those of you that want more help with how to properly roll a trade, I am going to offer a free workshop for those of you that are interested. But I need you to sign up for my email list below because I will be communicating all the details through email and I don't want you to miss it. Remember, keep learning, Keep earning, and I will see you on the trading floor.